Welcome to the Dividend Talk podcast, episode 90. Three stocks we'd love to own, but don't own yet. Hey guys, welcome back to another episode of Dividend Talk. Today we're going to discuss three companies each that we would love to own, but unfortunately we don't own yet. And we have plenty of questions from the community as well, so stay tuned and we'll see you on the inside. European DJI. One of the questions came in and it's on probably everybody's mind. How the fuck are you doing?
I'm doing well. I'm not in the war zone, so I'm over here in Poland. Of course, from a 3-hour drive from the border near the capital in Warsaw. Um,
Yeah,
but no, it's going well. I know Dividend X asked a question about
yeah, yeah.
um, how it's doing and sharing the greetings from Sweden. So I can tell you, we have some. We have a mother and a child now living with us since first day.
Hmm.
And how is it? It's really awkward, right? To have someone suddenly in your house, but I'm glad that we can help. Um, a lot needs to be arranged. This person just lost everything. It was not a poor person, actually quite wealthy, living in the center of Kiev, but just everything is gone. Everything is gone. And
Yeah,
she told me some awkward stories about going to the ATM, taking a pack of money which hardly fitted in the suitcase, and then trying to buy dollars from it, which was really, really hard at really, really expensive prices. But at least now in Poland, when she wants to sometimes buy something from it, she gets a more attractive rate in zlotys. But still, she just lost overnight almost all her wealth, and the money she has left is probably just enough to buy a plane ticket to a country where she would like to settle. And she told me like, literally like, I now need to think about what to do with my future. It's a full reset now. So she's not expecting to go anytime soon back to Kiev. So she's thinking now, like, which country can I go to as a refugee to start building a new life? And she will probably stay for 1 or 2 months with us to figure that out
yeah,
effectively. But it was tough. I went on Thursday also to the train station to pick them up, and then you see it's like kind of chaos there. People just sleeping on the floor, kids on the floor, not knowing what's happening really. I guess we asked a few other folks to come to us to at least sleep or for 1 to 3 days to just regenerate, but they didn't want to. They wanted to take the train to Poznan, which is in the direction to Germany. So I was there at midnight at 1 o'clock or something like that to pick up the lady here, and yeah, they just want to take the earliest train to Poznan. For them, it's like more like further away from the border, if possible, and towards Germany, Netherlands, wherever it leads
yeah,
them. It was a sad view, but kudos to all the Polish people. They are really amazing here. Everyone is using Facebook and such to help each other out with housing. And these 1.2 million or 1.5 million people are really now being consumed just by everyone just at home, right? Our
yeah,
cleaner even, she has like 30 square meters, and she had like 4 or 5 people lying on a blanket on the floor just so that they didn't need to sleep on the street. So
yeah.
it's crazy.
I mean, it's awesome what you're doing and Polish people in general are doing. We see lots of it on the news, and the generosity is obviously it's incredible, but it kind of puts things into perspective. And listening to your story, you're seeing it firsthand. I mean, I don't know how I would manage in either of those situations. So I mean, credit to you, and I'm glad that
Well, it's the
they
least we
are
can do, right?
some are safe. Yeah,
Yeah.
yeah,
But just when people are listening, please don't send stuff to Poland. Please don't do it. Most of it is just thrown on a pile, and it will take them weeks, months to sort out. Just send money if you want to help. The local, I said NGOs and such can buy blankets from it or whatever they need at that moment. I also know that some of them, they just need, I said, chargers for phones. Yeah, simple things
yeah,
like that. When they arrive from Ukraine, they need to charge their phone to get in touch with their relatives. But just don't send stuff. Don't clean your garages and think you'll do someone a benefit. There's already so much, and what they need, the NGOs know it. They just need cash to be able to buy it, to avoid a mess, really to avoid a mess.
Okay, so we might move on from that in onto our show. We might talk about dividend hikes. There's been quite a few, and one of our favorite chocolate producers has had quite a hike this year.
Yeah, Lindell and Sprungly hiked the dividend with 9%. It's already 25 years, right? At least that I could
Mm,
count. And with this, it is now going to a 1.2% yield. So it's really low yield. And I don't get it anymore, right? There are many companies in the Noble 30 index that are just like yielding 1.5%, but still having like Lind a payout ratio of 60%. So it's clear overvalue. I mean, this company has a price to earnings of 50, but the most difficult one is it has a share price of 100,000 and 500 Swiss francs.
wow.
Now, I can't afford such a share. I know they have some kind of Class B shares. I don't know effectively how it's called, but 100,000. I imagine like that. It's like Berkshire Hathaway, right? Such a share. But then, and I believe if you go there to the shareholders meeting, you get chocolates and everything. Of course, you know it's a small thing. Yeah, and then the second company is Spirax Sarco Engineering, similar 15% hike, really a huge hike, 30 years of increases. It's a UK company, but also 1.14% yield and a 40% payout ratio, and also PE of 38. So
Mm,
these are just huge, let's say, hikes, 15% in my opinion, also for such a company. And I believe the ticker symbol is SPX, and for Leaned, I believe it's LSN on the Swiss Stock Exchange, and the other one on the UK exchange. But with this, all the Noble 30 members announced their dividend hikes. So I'll soon, if I have my mind to it again, create a post about what the averages are and how the index was performing, because I'm also investing still on a monthly basis in the Noble 30 index via trading 212 Pi, which is actually
yeah,
doing quite well. I see the dividends all the time incoming. The average yield was last year so I will do all my analysis. But now I have a full cycle to look at, like, okay, how was 2021, and then the
yeah,
hikes now being announced.
yeah.
And
Look
then,
forward to that.
d- do you work with Spirax Sarco Engineering in your
No,
case?
no,
No?
no.
Okay. Because they're kind of
Um,
an engineering services company in the UK, right? And they're quite huge.
yeah, they're quite big, but I don't think they're in. No, I don't know, but I don't think they're into automation or that side
Yeah.
of
No,
engineering.
no, they're more
Engin
into the services business.
engineering is a broad spectrum.
Yeah.
You've got many.
Yeah, true,
You can
true.
you can get toilet cleaners now that are toilet engineers at this rate. So I mean,
Oh,
it's a
that's a nice one.
pretty big space. But no, we don't. You'll see in our main topic, you'll see some of the companies that I work closely with.
Yeah, cool. So yeah, I'm happy. There was no dividend cut. Only you could argue Total Energies, because they had in 2020 they had I believe 268 in
Yeah,
annual dividend, and in 2021 266. So they had a dividend cut of 2 cents with that. So I will need to kick them out of the Noble 30, and I have already the next one listed up. So I will also probably do an article about that in the upcoming weeks.
yeah. Was that currency, or was it they have a
No, they
policy of?
just I think when the pandemic hit, they just lowered their dividend with 1 cent per quarter or something like that, or 2 cents per
Wh-
quarter.
Why
Yeah, it's
why would
really
you bother?
bollocks.
Why would you
Yeah,
bother?
exactly. Why would you? I still don't know.
Okay, so we might move on then to our main topic, which is three companies we'd love to own, but we don't own yet. I might let you go first to give you the honors of the first company.
So one of the companies that I don't own yet is probably one of the most boring companies, and we didn't speak about them too long ago. We spoke about them not too long ago, and that's Wolters Kluwer. I think you have an issue pronouncing it. Wolters
Yes.
Kluwer for me is really, really interesting because I know it from being a student, right? When I was living in the Netherlands as a student, I was effectively turning their databases into, sorry, their content into XML so that they could enhance their databases. Yeah, so the
Yeah.
database could be published in multi, on websites, DVDs, whatever it was. So it was a boring business, but as a boring work. As a student, I earned quite well, like 10 or 12 euros an hour at that time. That was like twice as much as my job before. So I always had some passion for Wolters Kluwer as such, and it has been just on fire, right, over the last years. With that, the PE, the multiple is now 26, so it's a bit on the pricey end. Also, based on a free cash flow point of view, it's a multiple of 23. Um, but what I like about this business is like you just can't, if you're a tax advisor, if you're a lawyer, you just you, the only place you can go to is Wolters Kluwer or Relax. Yeah, those are really the database, and you pay really lots of money for it, and you just have no alternative really than that. So also in the healthcare and such, when you do research, so and this is so nice, it has effectively an ugly poly, or how you say it, here in the market. It sells content, yeah, and it just captures all the content, cleans it up, and then sells it back, big databases. So for me, this is such a company with a licensing model, which is really, really strong. And once you're in, you're there. They can hike the prices quite easily. I know that probably when someone would look at it, they say it's a no mode company because people don't know these companies really. But for me, it has quite a high mode because it is really
Yeah.
sticky. As a lawyer, you would not really exchange quickly your source that you use for all your cases that you're building and such. So you're really dependent on something like Wolters Kluwer. Now, and what I love about it is just their track record already of 35 years of dividend growth. The last 10 years, they grew their dividends with 8.7%. And I missed a bit out on Wolters Kluwer because not too long ago, you could get it, let's say, for 40, 50 euro, like 3, 4 years ago. It was kind of flat until then also, but just recently it really took off with all this craziness. And I must say that now, if you look at it, the company was trading at 105 euros at the 52 weeks high not too long ago, I believe in November, December, or October. Now it's trading at 87 euro. It was trading in the high 70s, I think, last week, but it's still too expensive for me. The yield is 1.8%. I could have this one. Usually my minimum level is 2.75%, but for a company of the quality of Wolters Kluwer, I might close one eye one time and get it at 2.5% or something like that. But for that, it still needs to come really, really down. But I just really love this company. I would like this to be a top 10 position for me. So
Yeah.
that much I believe in this company for the next 10, 15 years. I think the CEO is brilliant, really doing a good job. They're also buying back shares. Dividend hike, the most recent was 15%. So I wrote one time an article about Wolters Kluwer, I think last year around this time probably, so people can find it on the blog if they Google for it. And their buybacks are really effective. They're really bringing down the share count, and that helps them also to increase the dividend. Although, of course, buying back shares at these prices for me is a bit expensive.
Yeah.
But yeah, this company is just on fire.
Yeah, I know it's a company that you are longing to own. I don't know if you know, I don't think I've told you, but you do little segments on your blog about top 15 companies in the Netherlands and top 15 companies in,
Yeah,
you did somewhere else, Germany, was it, or somewhere? And
correct.
I set up pies with them. You do the work for me, and I just put in 50 quid a month and let it go just to see how they perform. And so I own a little bit of Waters Kluwer, just a small bit, but I have them in that Netherlands pie that you put up.
Well, from that point of view, I have it in my Noble 30
Yeah,
pie,
see,
so I probably own one or two shares from that point of view. But
yeah, you just
it's kind
don't
of,
own
I
enough of
treat
it.
that more like an ETF, so I'm not even considering the stocks in there. Yeah.
Yeah, yeah.
Although I need to count them for the tax purposes, I guess.
See, you have to count them. See, yeah.
Yeah.
Okay, the first company on my list is an automation company, which is ABB. It's a company that I use quite a bit throughout work. And actually, a fun fact, but when I was in college, I had my project was based around their robot and communicating to their robot over TCP, which is kind of like a internet protocol or something like that. So I have a couple of videos up on YouTube demonstrating how to do this. And it's quite popular videos actually, under my pseudonym English Engineering, but that's for another day. But as you can imagine, as an automation engineer, heavily involved in robotics, motors, drives, PLCs, they pretty much apply all of them. They have great interfaces, really good user experiences, customer service is brilliant as well. So all those tick the boxes for me as an engineer. Looking at it as an investor, they have paid dividends for the last 15 years, I think, although it's not always increasing. They have cut it once or twice, but they do have an attractive yield. They've about, I think the yield at the moment is around 2.7, 2.8. Their forward PE ratio is about 14 as well, which is okay. I still think they're a little bit expensive for me. I'd like them in around $25 at the moment. But I mean, 32 is not bad. You get a 2.73% dividend yield. What I do like about them is that their free cash flow is growing, and they're using that to pay down a lot of their debt. So they did take over a company. I have to remember the name. I think it's Codian Robotics. So they had a deal back in 2020, which again expands their automation segment, and that obviously incurred some debt, so they're paying that down really, really fast, which I like. But overall, it's really like if you think in the automation field, particularly in robotics, you got very few that would stand out as a brand name, and ABB would always would come to the top. Staubli would be there for robotics, and Kuka and others, but ABB for me are really up there at the top. So I want to try and invest in what I know. I don't have to I don't have to research these what they do or what markets they're in too much because I'm heavily involved in that market. So all I need to do is just read their annual reports and get a feel for it. But they're certainly a good company to look for.
Yeah, and I can second that. At least company. I'm not so sure about the stock, but ABB, when I was working with them, top notch. And
Yeah,
I could even see myself being an employee of such a company one day because you just know you work with best in class, in this case, software for the industry.
yeah,
It is just really, really good. From a stock point of view, right? That's why I'm saying it. I struggle with their dividend growth. It grew just like 1.5% over the last 5 years, and that's really too little for me. And you mentioned about cash flow, right? And I've got the cash
yeah,
flow history here in front of me. They earned the same cash flow in 2021 as what they did in 2012, 2013, and even in 2016 they earned much more cash flow than today. So for me, this company, from a cash flow point of view and also from a revenue point of view, didn't go nowhere in the last 10 years. I do agree that over the last 2 3 years it's found its track back to growth, let's say.
yeah,
But it sounds like a company that has been also going through the how is it, through some portfolio management activities over the last years, like disposing, buying,
yeah. There's
but
definitely
it doesn't add bottom line a lot of value yet. That's what I see just by looking at the 10-year numbers.
for me, and that's why I said with the dividend history as well. Looking back the way is not as impressive, but I'm more forward looking, and
Yeah,
probably because I'm in the industry, I know the exponential growth in this industry, particularly in automation robotics, is going to be off the scale. I mean, they'll probably have robots doing podcasts for us at the rate they're going, but I mean,
yeah,
it's taken off at an unbelievable rate, and they are transitioning and going into that
Yeah.
much more, particularly with the acquisition of Codian. So looking back
Mhm.
is not pretty. It's more about
Yeah.
looking forward, and that's the way
Cool.
I'm treat. That's the way I would treat that company. But I
Yeah.
would still have to make sure that they are growing the top line and bottom line, maybe for 1 or 2 years more, and then I would certainly buy them. But it's a company that I just want to own because I work with them so much.
Yeah. And do you have a price in mind that you would like to own it for? Because it's trading now at 30 Swiss francs.
I would love to buy them. I'd probably buy them on the American Stock Exchange. I would
Yeah.
probably buy them at around $20 in around that range. Twenty
Okay.
dollars. I would buy it without thinking. Um, I'd
Yeah.
probably buy it without thinking at $20.
And what's the ticker in the American Stock Exchange?
ABLZF.
ABLZF. So it's kind of such over-the-counter stock, right?
Yeah,
Yeah.
yeah, yeah, yeah,
Yeah. Yeah. Okay. Super. Yeah, that for me as well. It's a great company. I'm a bit further away from you, so I would like to see some evidence in in the earnings first. Let's say in the cash flow, but probably
yeah,
by that time it's too late already. Yeah. But from a multiple point of view, it's really not too bad, right? There's a multiple of 14 or something like that, and a forward multiple of 13. So
yeah,
from that point
yeah,
of view, you could say it's quite cheap. But from a cash flow point of view, it paints a total different story. But that's probably because they are then heavily investing here.
exactly, exactly.
Yeah. Okay, cool. Super. So if you know that, by the way, I wouldn't expect anything else than an engineering stock from your point of view. Um, and I expect more engineering from you to come up. So my second stock that I would love to own is Nike. I mean, Air Jordan. You know, have you seen, by the way, on Netflix this documentary about Michael Jordan?
Yeah, of course. Who has not seen that?
Ah, that was great, right?
Yeah, it's
And
brilliant. It's brilliant.
so for me, he's kind of a guy that also made Nike, right? I also read the book Shoe Dog from the own founder of Nike, and he was
Yeah,
also talking about how they signed Jordan and such, and what he did with the Air Jordan shoes. But this is what really has plugged into my mind when I think about Nike. And I've been looking at Nike already before the stock split, like several years ago, and it feels like I'm chasing a carrot, yeah, all the time in front of me. Because this company, what they did with the direct to consumer business now as well, yeah, just cutting out the middlemen, the shops, and straight away online selling their shoes. You can even make custom made shoes, and people are paying up for this, you know, and sometimes even several $100s. It's really crazy for me to believe because I'm a Scrooge, yeah, from that point of view. I buy Nikes on Black Friday, and I don't want to pay more than 60 euros for simple Nikes or something like that.
yeah,
Yeah, so that's me. But then, man, that people are, for me, it's kind of the Apple in the what is it, in the how do you call this, in the retail industry, fast
yeah,
consumer goods or something like that. Let's say in the
yeah.
shoe business. Yeah, for me, it's kind of the Apple equivalent. The brand power is so strong, and that's why this is a company I just would love to I just would love to own. You know, but $122, the PE is not too bad, right? With 32, the dividend yield one is also quite low again. I don't see it going in half. Although it was trading at $180 almost in the autumn last year, right? So
Yeah.
it really fell already, like, what is it, 25, 30%? Maybe I would dip in my feet when it goes to 85-ish, something like that. But that would not be probably based on a fair value estimate, but rather on just a love for the company, that I would just like to buy probably 10 shares that I can say that I own them. Because Nike for me, like Wolters Kluwer, should be a top 10 position for me.
Okay. But I mean, we're European, okay? So Adidas or Nike?
Nike.
I prefer Adidas. So you can see, look, I'm actually wearing Adidas top. I much no, as a brand. I'm not talking about company wise. As a
Yeah.
brand, I much prefer Adidas. Adidas
Is it because
trainers.
of Liverpool?
No, 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 not to do with Liverpool. Liverpool are Nike.
Yeah.
Liverpool are sponsored by Nike.
Okay.
Yeah.
Okay. Cool.
So I much
Yeah.
prefer Adidas as a brand. And interestingly, I put out a tweet. I think I've only tweeted once in the last 2 weeks, but I put out one when price was starting to drop. What companies would people like to buy? And Adidas came up quite a bit actually,
Yeah.
which was quite surprising.
Well, I was wearing Adidas as a teenager in the mid 90s. You need to know mid 90s Netherlands, that was the time of going to rave parties. So probably the Dutch people and the German people understand this a little bit. So I had almost a bald head. You called it an island. Yeah. So you had like a few millimeters on top of the head and the rest was kind of bald. Then you had the Australian or Cavallo, I believe, training suits. And then, yeah, you either at Nike or Max, but I had these black Adidas shoes with the three white iconic stripes, and also such an Adidas trouser with all the buttons that you could just open up at once.
Yeah.
Going to that with that to rave parties, as an example, and
I remember those pants rip-offs we used to call them because you'd wear them
yeah,
and
yeah,
people
yeah,
just
yeah.
rip them
Yeah,
off.
exactly. Exactly. But for me, Adidas is a bit of an awkward company. Yeah. Also, I know that they cut the dividend not too long ago, and but
Mm.
then they went like really berserk again. Then it suddenly became popular in the US, I believe. Adidas. That's why it had such a ride.
Yeah.
Um, but yeah, I would prefer Nike as a stock, but as a company, yeah, yeah. So now that you say, I have some youth sentiment with Adidas. Yeah. Good old
Awesome.
times, good old times. These parties. Have you checked them ones on YouTube still? You can find those
No,
rave parties from the 90s. And you should Google. It's
I
crazy
will. I
stuff.
will.
Really good. I mean, what kids do nowadays is nothing compared to what happened there. The shit was really tough. And some of them
Kids
became
are out.
dividend investors.
Kids are out with their phones now. Kids are out with their phones, so they record everything.
Yeah,
Back in our day, that wasn't there, so you could get up to a little bit more development, I suppose.
exactly. So, what's your second company that you would love to own?
I mean, you did say you expected another engineering company, and you are correct. So the second one on my list, it's actually the first one I wrote down was Schneider Electric. Again, it's another company that I use quite only recently, actually. So up until maybe last year, obviously I've heard of Schneider Electric, but I've never really used their products. Now we're building this whole multi-million machine, and most of the drives are pack drives from Schneider. We have to program them and get them to work, and really, really nice. I love. So when you're writing PLCs, it's going to be a little bit technical. You have different languages that you can write in. Some you can write in ladder logic, and some you can write in like you're writing code, for example. And Schneider's really, really good interface for that. And again, I just love these companies because their customer support is brilliant. And it's important for me as an engineer that when shit hits the fan, I need something resolved quickly. I might not know how. You need to be able to pick up the phone and have someone say, check this, and this, and you're away. So it's a really, really good company. It looks a little bit better on the numbers than ABB, I have to say, right off the bat.
Yeah.
So I use Morningstar as a quick reference, and you can see straight away. Okay, they had a dividend cut back in 2012, but it has been increasing steadily ever since at a nice rate. The free cash flow, as we said before, that has definitely been going up. It's nearly double what it was in 2011. We can see their top line then revenue was growing, while their margins are also increasing, which is also good to see. So certainly as a company, I would put them similar to ABB in terms of how I'd like to work from or the experience I get from them. But then from the number side, Schneider would be one that I would 100% invest in much before ABB. And I think you did a post or something, and you
I did
had
a
them in there.
video on Honeywell, 3M, Schneider Electric, ABB, and Siemens.
Yeah,
And for me, Schneider was probably the best company in there, just not yet from a valuation point of view. But if you look at the, I said, I mean, the dividend growth rate and such, it's actually quite good. Not really not too bad. But you know what is so interesting? You said customer service, and then
yeah,
knowing that this is a French company. I mean, it sounds
yeah.
German, but it's listed in France. So how can customer service be good from a French company? It's like For me, it's like an oxymoron.
Exa- exactly. But to be fair, I don't know if we have many French listeners, but anyone I speak to are not French. Actually, the most of them are Italian whenever I speak to someone. So,
Ah,
and
okay.
they're not as good. I mean, sometimes they can be awkward, but they're quite good with us.
Yeah, but
But
it's from the European industrials, in my opinion, it's the best performing industrial in Europe, Schneider.
I mean, it is. But again, you mentioned with the price, we might be a little bit late to the party here. You can see their share price was is in around 66, 70 euro for a long time, and then phoom, it's up now at 141. So,
Yeah.
but
But
I mean,
some of those they come down again, or they at least to the mean, either by
yeah,
the earnings growing into the current price, or that it's just this patience, right, is so difficult because some of these companies you only get a chance like once in 5 to 10 years to buy them, right? And then probably
yeah,
there are some headwinds, and then you need to still have the same conviction as today, which is really
yeah.
difficult.
And one of the key differences actually between these and ABB is that ABB, we know, right, that they're obviously investing, they're divesting. There's a lot of things going on there that they're trying to push growth. To my knowledge, Schneider Electric have not made any major acquisitions or mergers in the last couple of years that have contributed to this growth. It's purely organic. So it's organic sales, and that's quite something, particularly in this field. I do believe the next 10 years we're going to see a lot more organic growth from all these companies. But over the last decade, for Schneider to have mainly organic growth, I think is quite impressive.
Yeah. Yeah, it's really definitely also a company that I could own, to be honest. And maybe it's hey, in the end it's an industrial, so hopefully it will be also cyclical when investment stops
Yeah,
during the next economic crisis, right?
exactly.
Yeah,
Which might not be too soon.
yeah, super. Okay, hey, my third stock is yeah. What else can it be? L'Oreal. I mean, second French stock here. Yeah,
Yeah,
we're complaining
yeah,
about customer service, but what they do
yeah,
make is really great products. Yeah, and yeah. So for me, L'Oreal is just like probably the most iconic company in Europe. Yeah, at least from a brand point of view. We have the Nestle of this world, but if I think about what everyone knows in the world, like every child probably even when they see their mothers getting dressed up before a party or something like that, it's L'Oreal, right? So, and I can't see that L'Oreal won't exist anymore in 30 years from now or something like that. So for me, this is a company that I just would love to own one day. This just price to earnings of 40 plus. It's insane for lipstick. And well, we talk about it's more than just lipstick, of course. But also at least 34 years of dividend growth. I believe they had a flat dividend not too long ago, was it like 2 years ago because of
yeah,
the pandemic, but still a 10-year dividend growth rate of 9.15%. I believe the last hike was 20% from 4 to 480. I don't know. I don't have the data here. I'm talking from my mind.
yeah.
Um, but this is just a great company, right? So for me, L'Oreal is definitely also, I mean, if it ever gets into value zone, I could also seeing this being a foundational company. And I've got my kind of my buying list, right? That I would
Yeah.
once have to have companies from, and L'Oreal's on there, Wolters Kluwer, Nike. So these three companies are already on there for long time, but never got into the buying zone. So
So hard
ticker
is so
symbol
hard.
OR. Yeah.
Yeah. It's so hard with these companies, and you expect to pay a premium for quality companies, but then the value investor inside of you is just going,
Yeah, I just
you,
can't buy it.
yeah,
Yeah,
it's
so
hard.
it's now 338, I believe. I don't remember. I did a video on it like 5 months ago. Probably 250, 240 was my fair value. So it is really, really, really hard for me because I don't just see it coming anytime soon into this direction let's say in the low 200s.
No, they have the most iconic catchphrase as well, don't they? Because I'm worth it.
Yes, and I believe I don't know. I don't think it's their mission today, but I know that one day they had a mission statement or strategy, something like that. we just want everyone to feel beautiful or something like that. I mean, you can mobilize your people around this, your employees, your customers, right? It's
Yeah,
better than what is it, Unilever, the defining the redefining the purpose of mayonnaise.
yeah. I can't remember Unilever's,
Yeah,
but
there was one of
nobody.
the hedge funds that said like they shouldn't be busy with redefining the purpose of mayonnaise.
Yeah, but nobody beats British American tobacco. Nobody beats
Building a
beats
better
them.
tomorrow.
Building a better tomorrow as a
Yeah,
tobacco company. Nobody beats that.
yeah. And talking about Nike, I believe in the early days their mission was to beat Adidas.
And they
Yeah,
may have succeeded. They may have succeeded.
yeah, yeah. Exactly, exactly. So, what's your third company?
Okay, so I'm an engineer, so I had two engineering companies, but hey, I'm also Irish. And what do we love over here? And that is our booze and Guinness. So be no surprise, one of the companies on my watch list is Diageo. We did a show on them, episode 15 actually, which seems
Yeah,
so long ago. I think one of our first companies that we looked at. At the time, I remember
yeah.
we said that they were a great company, which they are. They have some strong brands. We're looking at Johnny Walker, Smirnoff, Guinness, which is Irish owned, Captain Morgan's. These are really, really big brands all over the world. But we just thought they were overvalued. Hey, what do we know? That was nearly 2 years ago, and our price has just gone up the way since
Up.
since then. Up, up, up. I mean, I still have that same sentiment, right? They have a P ratio of about 25, 26. Dividend yield it's getting lower. It's 2.19 at the moment. But I mean, from a company and from a brand power perspective, they have to be up there. And I really want to own them just because they have Guinness. Right? I'm not going to lie. I have a real affinity for Guinness. But I just always think they're overvalued. But I look at these someone like Texas Instruments, as in, look, you know what they do. They're not going to change. Just buy a small few shares every month or so, and dollar cost averaging over time. But it's a company that I really really want to own.
So it's ticker symbol DGE on the London Stock
London.
Exchange. So
Yeah,
you don't need to pay dividend tax on it. Of course, you need to pay dividend tax in your own country.
yeah,
But it might be interesting in a tax advantages account like we have here in Poland. Then you don't pay dividend tax at all of the dividends. So for a retirement account.
yeah. We don't have that luxury here. I think we still pay tax in Ireland on these companies, but
No.
um, they do have a good dividend history. I can't remember off the top of my head how many years, but looking at Morningstar,
Yeah.
looks like it has increased every year since 2011 at least,
It's
which
in the
is
noble 30, so it has at least 22 years. It's probably towards the
oh
30.
yeah,
Yeah.
yeah. So
Good. Nice
definitely,
list.
definitely a company. So two engineering stocks and one
And
alcoholic stock.
booze. Well,
Yeah.
yeah, what all three products an engineer needs.
If you want to know EMF, there you go. Engineering and booze. That's it in a nutshell.
Do you drink sometimes at work while you're engineering things?
I wish I'd be sacked.
Good. So, I'm also curious to hear from the listeners. Yeah, you must also have such stocks that you would love to have, but you just never got to buying them. So feel free to share them with us on Facebook, on Twitter. I'm always very curious about this because we feel you. We have the same. There are just these stocks. So yeah, feel free to share it. But let's go also on to the listeners' questions. We need to go a bit quick through it, I guess, because we have a lot of them. And I
Yeah.
will start with the one from Alexandras Skrinikovas, who sent us few questions on Facebook. And the first one is around Viatris. He knows that I did a video about Viatris not too long ago, where I was mentioning like, oh, I believe it's worth $22. I bought some at around what is it, $14 or $13. They are now trading around $10. So you could argue like Baba, there's a stock again that after I make a video, it goes down. But he is also referring to a video that Ian Lopuk just published on his channel, and which he refers to like kind of comparing it to a lend-lease type deal or annuity of sorts, because it's a cash cow that will not grow but slowly shrink over time. Um, so I could see this because we discussed on it, I think last show or the show before about Viatris when we got the question.
Yeah,
It's a company that effectively is now doing portfolio management. They also sold their, I would say, biosimilars business, but there's a nice deal behind it. Yeah, so they get a stake into the new company that they sold it to. So effectively, it's really, really interesting, right? Because that means they will get, hopefully, in the form of dividends, however they do it, or in the form of equity, they will get some back. Um, but for me, management is really clear about what they are doing, and the why the stock went down to $10 is also because the earnings looked poor, the write-offs. But we knew this. But then a cash flow of 2.5 billion, yeah, bam, and also for next year, plus a buyback of 1 billion, a really low PE of what is a 5 or 6 multiple. So for me, I'm fully with Ian Lophook. You could call this a company like a cigarette company. Then, if you think about it, that revenue will not grow and such, but the cash flow and the buybacks will just at a certain moment really start growing the company. And buying back at these prices is going to have a massive impact. It creates an 8 to 10% buyback yield at the moment. Yeah, and then from cash flow, not going into debt even, right? Because they are paying down debt at the same time as well. Debt is
yeah,
also their biggest issue, so we want to see them paying down debt. You need to know then, if you think about my buying fair value price is still $22 because I did it. I modeled my free cash flow at 2 billion. They are predicting 2.5 billion. I had a growth rate in my baseline case of 4% and 2% thereafter, and a 10% discount yield, and a terminal multiple of 12, which is really not a lot. So, and if you would say that it's not trading at, let's say, a 6 multiple, so 212 is indeed double the price. I think it could do that in the next 2 3 years. So, and otherwise, I get a nice yield in return as well of the dividends. So let's see. My case still stands. It's not. I said it's supposed to be a tier one or a tier two company, tier four, tier three. Now, for now, tier four. So probably I buy another 100 shares this week, depending on the zloty and how it's doing.
yeah, yeah. I mean, look, it's not without its risks. As you said, you mentioned depth
Yeah.
is quite high. They sold probably their fastest growing segment. They've got rid of that, and their management does not really have a good reputation. I mean, they've brought over some management from Pfizer, but I think Moylan management as well,
Mhm.
which doesn't really have a good reputation. So you can see why it is trading where it is at the moment.
Yeah.
But like you said, these share buybacks alone can really start propelling this. And
Yeah.
I don't think a fair price estimate of even $18 is a lot to ask from here. I mean,
Yeah.
that's nearly an 80% upside. So I don't see too much downside here. Um, we could be wrong, but at these prices,
Yeah, that can go.
it's worth the
Every
risk.
stock can go to zero, right? But that's
Yeah,
why I've got my system that if a
yeah,
stock goes to zero, it's not hurting me like that. That I will
mm,
be lying awake, not at all. And
yeah.
then
But
maybe also there because one of his questions is about Alibaba, right? Here as
yeah,
well.
yeah,
And Alibaba, I bought the average price of 180. It is now, what is it, 90? So I lost like 50%. It will need to grow 100% to come back. And I bought it as a non-dividend stock, assuming that I will double my money in 3 years. It will
yeah,
now need to do 200% in 3 years. So it only
yeah,
becomes more challenging. But Alexander's, I'm holding. I because he asked me whether the most important organ when it comes to investing, my stomach, is still holding up. Yes, because look, even if it goes to zero, I will of course take my learnings. Yeah, because I don't like to be wrong. Yeah, and so far, if you take stock price as a guidance, I've been wrong, and I didn't see some of the write-offs coming up, and I do think it's because of pressure on the accounting standards that is coming from the American government.
yeah,
So it feels a bit, yeah, it gives me maybe, yeah, maybe some doubts, or how you say it, whether you can trust the numbers. So I really want to pay attention to this in the upcoming quarterly reports, whether this was a one-off or whether it will continue. Because when it comes continue, I might sell at a certain moment my money, because then I cannot trust the numbers.
yeah,
Yeah, but other than that, if you look at it, I don't see Baba going anywhere. So I'm still bullish on this company, and even more bullish on the current share price. I just have my max number of shares that I want to own. That's why I'm not buying more, and I need to just sit on it. Yeah, because if I start breaking my own rules, I will get into trouble with investing. So
Yeah,
these rules are designed to against my own stupidity. So yeah, so I'm holding to answer the question, Alexandras.
I don't even look at the share price. I think I have 20 shares at 172. Um, I don't even look at the share price anymore. I just let it let it go. If it goes down, that way my stomach is in good shape. One thing though, I'm very happy I got rid of that option there a couple of
Yeah,
weeks ago. I did take a big loss on it at the time, but I probably would be looking at a bigger loss, and certainly the margin requirements would have been a little bit more unsustainable. So I'm quite happy with that
yeah,
decision. But in terms of the stock, I'm still holding. I don't look at the share price. Actually,
yeah,
it's one good thing about being busy, right? Right, work has taken up so much of my time that I barely even check the share prices. Like, I just don't
exactly,
get time to do it.
exactly.
So it's good. It's good from that perspective.
Yeah.
Alexandros asked then another question about BASF. Does exposure to the Russian oil, gas, as well as sky high fossil fuel prices change the long term investment thesis?
So this is hard to say because I went to the BASF website. I didn't see any media release about how is it their impact of the sanctions towards BASF, and their annual report is neither published yet. So I would need to see this information first to be able to answer this question. Logically, you could say that this has an impact on BASF, right? Because they do a lot of they have a chemical business as well. They need this as an input, as an example. So logically, it will have an impact. It's just hard for me to answer this question now, and I need to see more data from BASF coming to be able to assess it. But maybe I should just write to investor relations about this to ask, like, what's their exposure
Yeah,
to Russia? Yeah,
that's the key question, and I don't recall reading that in any of their annual reports before or their interim reports. I don't recall them specifying how much exposure they have to Russian oil and gas. I could be wrong, and I'll have to go back over because I do analyze these for
mm,
sure dividend, and I just don't recall them saying that. So it does depend on how much exposure they have. Obviously, if they have 10%, okay,
yeah,
it'll dent them. It's not a big deal. If they have 50, 60, 70%, okay, it's a problem.
yeah.
So it probably
So
depends on how much exposure they have.
yeah, so Alexandras, if you have more information, please share it with us on Facebook. Okay, I'm very interested to do this assessment because there are more companies that I want to look at from a Russian impact point of view in my portfolio.
Mhm.
So yeah, if you have something, just share it with us. We'll be very thankful.
And if it is on the annual reports, I need to study a little bit closely.
Yes, exactly.
And the last question then from Alexandros is, what is your overall thoughts on the dividend growth philosophy mindset? Have you ever had serious doubts whether it is the right strategy for you? He's given some examples about tax efficiency and then how some companies such as AT&T and ExxonMobil can kind of push themselves to unsustainable limits
Yeah.
to pay this dividend.
I never had doubts. I was jealous sometimes, right? I was jealous on in 2020 when you had all these stocks. Like if you would just throw it against a wall, it would even stick. Like a DocuSign in the end for making some digital signatures or something like that. These kinds of companies that they just doubled, tripled, and you see them on social media. So y- I didn't have fear of missing out. I was just jealous. I thought like, why are my stocks not on fire like that? But then from a dividend growth point of view, right?
Yeah, yeah,
So, but I've never doubt because I just see the cash flow coming in. It's like hard cash. Yeah. I love it. And as long as I've got that love for this cash flow, I'm not doubting the tax. Yeah, you get the tax inefficiency with it. I get it, but I take it as a given. So I just like the cash coming out of it. And when you think about it, what he mentioned about also some stocks like AT&T and ExxonMobil, yes, you need to study. So for me, dividend investing in single stocks does take time because you need to know what you own. Otherwise, throw it in an ETF. And for a European investor, there are not so many good ETFs that you can really benefit from a dividend
yeah.
growth point of view. I've written about it on my blog. If people are interested, you see one of the latest articles, no doubt. But how about you?
I mean, I just want to the two companies that Alexandros has mentioned, ExxonMobil, AT&T, right? What have they got in common? Really high dividend yields and dividend growth investors. And I'm using like the bunny ears kind of thing here. Really, they were yield traps, and that's about the size of it. If you roll back to last week's show, episode 89, when we talk all about dividend safety, I mean, we both said dividend yield didn't come into it, but we spoke about the fundamentals of the company.
Yeah,
And dividend aside, okay, if you take the dividend out of it, if you were to just analyze the companies based on those metrics, exclude dividend growth, you have solid companies. We
yeah,
just want these companies to pay back some of their profits to us. So I
yeah,
have no doubts about this whatsoever. My hope is to have lots and lots of really good businesses fundamentally that just happen to pay me dividends. Sometimes your emotions come in and humans make assumptions and all sorts of things. But on a really high level, if you bring it back to first principles, you just look at really solid companies fundamentally, and if they pay you a dividend, all well and good. We just want them to pay us increasing dividends every single year.
yeah.
But
And
I
this
have,
is the difference. Yeah. This
yeah,
is the
go,
difference between a dividend investor and a dividend growth investor. Dividend growth investors take fundamentals into account. Yeah, we don't just look at the yield and then buy everything with a yield about 5% or something like that. And that's also strategy that works for some people, right? If you
yeah,
need income today. We're dividend growth investors. That's why we often also accept lower yields, but we want to see growth, and this growth can only be supported by good fundamentals. Yeah, and sometimes you buy stocks that are more in their later stage in their life cycle, let's say. That's why the yields are higher, but then you have low growth. You still want to see growth. Yeah.
yeah. And a good example of that is the next company we're going to speak about. There's a couple of questions in around this company called ZIM Integrated Shipping Services, ticker symbol ZIM. They have a whopping dividend yield of 86.28%. I mean, it's hard. Like, you want to like get involved in that company. They have a share price of $78 and a quarterly dividend of about $17.
When
Your
is their
brain
ex
ought to
dividend day?
23rd of March. 23rd of March, I believe, yeah.
Wow.
So next week, 2 weeks time, 23rd of March. I mean, they IPO'd back in 2021, February 2021, and we were looking at different things offline. And you might recall, I just went, wow, just look, they IPO'd at about $11 or $12 or something like that. You can now get a dividend that's way even above the price that IPO'd. I mean, that's just absolutely crazy. The,
Nuts.
the only
Yeah.
the only thing is, look, I don't understand that business too well. I do know they're involved in shipping, and I do know that industry has the rates are sky high at the moment, and they're benefiting from that. They do have a specific dividend policy, which is I think is quite interesting. That they said they intend to distribute to shareholders on a quarterly basis approximately 20% of the net income during the physical quarter. So they have a defined dividend policy, which I agree with, and I think that's good that they have that, and it shows that they intend to pay the dividend. What they are in, though, is they are in a really cyclical industry, and it can go up and it can go down, and it can work both ways. I'm really tempted, as from a dividend capture point of view, to try a
Yeah, that's
company
what I
like
wanted
this.
to ask you.
I'm really
That's what I
tempted.
want to ask you. Will you do dividend capture?
I'm really tempted because I was looking at their historical charts, and it's only a year, but I don't see a massive drop every time they've paid a dividend. And this might be a perfect candidate for that. Might be, but it could blow up in my
Yeah,
face.
yeah.
Do you know
Because
what I
what
mean?
is the quarterly yield? If you take it from quarter point of view, 20% then or
20%, yeah, something
22%?
like that. They're paying $17 dividend,
Yeah.
so about 20%.
So you could try
Less.
this on 12 shares or something like that. You buy for $1,000, you get
Yeah, I mean,
you take 240 dollars of dividend, and if the price doesn't drop, ka-ching.
kitching, you're in. I'm not going to say I am. I might try it. I have to look a little bit closely to see, but it looks like an absolute perfect candidate. The company is too young to make an assumption from a dividend growth
Yeah.
perspective. Said that they're involved in shipping. They're an Israeli company, and at the moment they're doing really well. You probably don't want to be buying at these prices. You probably want them to come down when they're at the bottom of the cycle. But I am encouraged that they do have a specific dividend policy to say that they're going to pay 20%. So it looks like they're shareholder friendly in that regard. And certainly now that they're making lots of money, you get lots and lots of
Yeah,
dividends.
because the shipping prices are high now, right? So,
Yeah.
because this is also what Mark Orosi mentioned on Facebook, because he brought the company to the forefront on Facebook. So, by the way, guys, just join Facebook. You get all this information and all this stuff. And yeah, he mentioned also that it's probably due to the shipping rates, and but I don't see this really changing anytime soon with the supply chain issues that still exist today. Yeah, cool
I mean,
one,
and this
nice.
they have a PE ratio of 2.5, or even it's even less. I think it's about two is what they have.
Yeah,
I mean, it's incredibly low. Um, they could be worth a
yeah.
punt, as you said.
But
But
the
I'm so
people
I'm
that bought the stock at IPO for $12 and now get a $20 quarterly dividend, a $17 quarterly dividend. That's like
could
you've got your investment back in a single quarter dividend. That
could you
I
imagine?
never heard of this in the 7 years or something like that. Dividend growth invest. I never heard of this.
But
Like,
but in this scenario, it's risk free for these guys. They've got the money back.
yeah,
Okay,
yeah,
they
they got
got
the
they
money
got
in a quarter. In a
they got
quarter.
they got more than the money back, so they can just sit there happily. If they sell on top of that, they're getting a huge return. I mean, it's incredible,
Yeah,
and
and then
kudos to
dripping
anyone.
it, right? Yeah.
But I'm
Yeah,
interested
but
here
this
because
is
it was
really risky for me, right? So
yeah,
for
of
me, this would
course.
be like pure speculation if I would do anything with this. That would be really
For
like to
me,
make a quick buck.
it's dividend capture in and out, and try and not make a loss. We'll see how that goes. I'm interested to hear from the guys on Facebook. Is anybody tempted? Are they tempted to buy them? Tempted in dividend capture, or what the strategies are around this? But from I spoke about fundamentals a few minutes ago. These guys, we
Yeah,
can't possibly know that. So this is just human emotions and juicy yields.
yeah, cool, good. Let's get us grounded again with the next question from Victor Tavares. And by the way, the last question was from John Baraclough. So sounds Irish, by the way. Um, so Victor says, how will inflation affect equity in general? Which sectors will do better? And are we selectively going more for European equity at the moment due to the US dollar exchange? Because the US dollar is becoming more expensive at the moment. And do you expect the Fed rate decision this week to influence your investments?
I didn't even know there was a Fed rate decision this week, so that's going to answer that question. Uh, it's not it's not going to influence anything from me.
Yeah.
Um, I don't know. It's hard. Am I actively picking European companies over US? No, not at the minute. We know the dollar is expensive, but sometimes it's expensive, sometimes it's cheap, and you dollar cost average over time. I just trying to find attractive companies at attractive prices. Um, for me, yeah, I don't know.
Yeah, same here. So I know where. So Victor, just theoretically, right? If interest rates go up, it becomes probably more expensive for companies to take on debt and to pay off debt. But also the expectations from the market will change because something called weighted average cost of capital defines the cost of future cash flow. So theoretically, when rates go up, you can expect values to go down because the WACC that you use for calculating the net present value has a bigger impact there. It is just not affecting my decision at the moment. I live in a Polish zloty currency, so I do have an issue because the zloty just lost 10% of its purchasing power for me, which even being more selective between euro and USD, US dollar doesn't even matter really. So I'm in a quite shitty position, let's say it like that. But like you, Derek, I couldn't be too bothered about interest rates. I do follow it in general a little bit in the news to understand it, will it impact the businesses more on the supply chain costs, right? Inflation costs, but not so much on the on. I mean, I would never sell a company like because of an interest rate hike. Never. Yeah, would you sell a
Yeah,
company because I sell a company because suddenly I don't see a future prospect, but
yeah.
I can't be bothered about 1 to 5 interest rate hikes. Yeah,
Uh, you can see where the question is coming from because his follow up question is their opinion on companies like Unilever and Kimberly, ticker KMB and ticker UL. And you know inflation is going to deeply affect these companies. So of course, if you feel like if you were to go back 6 months when we were saying, okay, inflation wasn't here yet, but in every single annual report it was talking about
yeah,
inflation.
yeah,
These are the companies you probably could consider selling at that time because we know they're going to come under huge pressure. And inflation, of course, is going to probably affect them more initially than some of the other companies we have. It's going to affect every company at some point because you
yeah,
have to buy raw materials. You have to,
exactly.
most companies have these. So it's going to affect pretty much every company, maybe except for the likes of Google or something, but it'll affect
Yeah,
most companies. But hindsight, you probably would have sold a company like Kimberly with inflation
yeah, but
coming because
that's why we do dollar cost averaging, right?
yeah,
As well. Yeah.
yeah. No,
By the
it's a
way,
fair question.
I like Unilever around 40 again. So if I wouldn't have had this issue with the zloty, I would have bought some this week at 39 something because uh, there was, by the way, a really good video of Cameron Stewart. I believe we got some questions there about it.
Yeah,
So definitely there is an issue with Unilever, and we know this already. We spoke many times on this already for a year, but Unilever at 39, you know, looks good. Looks good. Still, their tea
yeah,
tastes well, and they haven't spun it off yet. Okay. Hey, the next question is from Maarten, and he would love to hear our opinion on Coloplast, one of the Noble 30 European dividend aristocrats, including the strength of the business and our fair value estimates. So, Maarten, I can't give you a fair value estimate because it doesn't even pass my screener at this moment in time. And when a stock doesn't pass my screener, I don't do an analysis as such because it's not worth investing my time in. However, before the show, because Mart is really nice guy, really engaged as well, I just looked up some things again to refresh my mind about it. What I liked generally is if you look over the last 5 years. So if you open up their annual report, the last one, what I love is the first page is a breakdown of the 5 year performance, and you can see that they're 5 years ago they had a revenue of 15.5 billion in Danish crowns, right, and now
yeah,
19.5 billion. Great. Yeah, this is really, really, really good growth, like 6 or 7% annualized revenue growth. And this is really, really good. And also last year, just a billion more. But then if you look at their all the way bottom line net income, it went from 3.8 billion. And 3 years later, it was still at 3.8 billion, while the company was growing lots of revenue in the meantime. Then it went last year to let's say 2 years ago to 4.2 billion and now to 4.8 billion. So it has really a good growth in the last year. But something I don't like about it is that the net profit is just like kind of underperforming compared to their revenue. And I've been looking at it because their costs are also growing a lot. So it sounds like that net incremental revenue comes actually at a really high expense. Yeah, that's what I'm seeing now. And it sounds like almost buying revenue from a first
yeah,
view that I see. And also, then if I look at the cash flow, one thing that triggered me is that their free cash flow is 3.2 billion or 3.3 billion, and their net profit is 4.8 billion. And then when I went into it, and I could see again that they are heavily investing. Yeah, so that's good for the future. Companies heavily investing. But for me, if you look then at the multiples, it's just not interesting right now. It has a multiple of 40. Yeah, it's just too high for me. It just doesn't pass my screeners. Business wise, seems to be doing really well if we think about sales, but they are yet to translate it really into profit. But it's probably because of the cost in the investments that they are making right now, Marta.
Yeah.
That's it on a nutshell for me.
Okay.
Coloplast, I believe the ticker is COLO-B on the Danish
Yeah.
Stock Exchange.
Yeah. Drip has asked us, when life goes back to normal, would you consider doing online training on business evaluation, potentially monetize, making money off it as well?
It's probably a question to me based on some of the videos I did, but no, Drip, I would not do this because I'm not a licensed professional and simple like that. If I start to give trainings and such, I feel like I owe you more from a services point of view. Now I still feel like pub talk on my videos as well. You're looking at the amateur doing things. I believe if I would even ask €1 for it, I said, I feel also accountable for you as an individual that you grow. It goes beyond sharing my knowledge that I have today. Then I also feel like I need to take care of people more, and I don't want to be in such a position either. Um, yeah, that's my answer today. Who knows if I ever will change my mind, but that's how I feel about this. Have you ever considered such things? Because you've got so much knowledge as well.
No, I mean we do this because of passion. I mean, we get emails into our inbox on this podcast. Will we promote these guys or do such and such? And it never fits with us. If we
Yeah,
were to ever promote something, I feel it would have to fit with us and for the guys, for everyone listening.
yeah,
I do this out of passion. I'm not here to make money from anyone else. I hope I make my money off investing, but certainly I have
yeah,
no intention of ever selling anything like that on my blog or doing any business training or something like that. No.
yeah,
If I made a tool or some sort of tool that's helpful, that's like maybe, but not
yeah.
certainly not courses or anything like that.
Yeah, exactly. And it's nice that you mentioned that about Dividend Talk, where we get these people asking like for affiliates or something like that, right? I get on my blog almost every week a question, a request. We would pay for publishing an article on your blog. Can we do an
Yeah.
exchange? And there's always some money involved or something like that. I've never done it yet, and I will never do this. It's not worth it, right? Why would I sell my domain to people I don't know? For it's not my blog is something personal, right?
Mm,
It's not a business. If it changes in a business, then it's a different topic. It isn't, and not on the short term either. So
yeah.
I'd rather stay pure.
There's enough spoofers, as I like to call them, out there that are willing
Yeah,
to write a book and sell it. So look, from our end, I think you'll gather it's not going to happen anytime soon.
yeah, true.
Richard has asked you, which company on your watch list is closest to becoming a new position for you?
I honestly don't know. I mentioned already. I would like to buy some more Viatris.
Yeah, Schneider Electric is one on my watch list that is most likely to become a new position.
Super.
Jeff has asked us, are you concerned that a lot of folks are now predicting a recession in Europe?
No, I'm excited.
I would be excited too. I mean, recessions are not easy for everyone. I'm in a pretty secure job. We've secured a contract that will keep us quite busy up until 2025 at least, and possibly beyond. So that's the next 2 or 3 years. We've just got a promotion. That means extra money, which means I have more money to invest. So I'd be more than happy for when I say a recession, for the stock market to go down. A recession hurts too many people, but I want the stock market to come down.
Yeah, same here. I'm excited for that. I can buy things at a cheaper price.
Yeah. Dividend stockpile has asked us, a lot of dividend companies are coming into better valuations with the larger market downturn. Are you adding more to your investments or keeping your buys similar to the past?
Similar because my zloty went 10% down compared to euro and dollar.
Mm,
So I need to, if stock market went 10% down and the zloty went 10% down, I'm still same as 2 weeks ago. Yeah, so I'm not taking anything from my war chest at the moment or something like that. but the zloty started to recover a little bit. So if it comes back to like 2 weeks ago, yes, then I might pull some extra money out for some of the companies I would like to have more on.
In keeping with my investing philosophy, I will be increasing monthly what I will be investing. As I said, I got a promotion, so that means I will put extra
Your
into.
savings rate is going up. Nice
Yeah,
one.
yeah. I mean, my standard. I'm quite simple. We live quite simply, and obviously, look, inflation will increase costs, and I have to look after that side of it. But I just anything extra is just going to go into investing. I don't need. If I keep it here, I'll spend it on shite. So I might as well
Yeah,
put it to work for me.
exactly. But inflation is real at the moment. Have you seen
Oh,
your gas prices? Hallelujah.
yeah, everything. Go- Off topic. I got quite lucky. We have a two tariffs over here with a day rate and a night rate,
Yeah.
and the provider I was with, I will say, forgot, but they did not charge us correctly. So they were charging us on the day rate, which is more expensive for the last
Mm.
18 months. Which, I mean, we didn't really notice any difference at the time. But then we get the energy regulator said, "Hey, you have a smart meter. We've just checked your usage, and your energy provider has charged you incorrectly, and you're to get a refund." So the refund I've got will probably pay for my energy for the next year. So
Nice,
quite
nice,
happy, quite
nice.
happy. So if inflation is hey,
Yeah,
it's
but if you could have invested that money last year, yeah, and then getting the dividends, you should actually send them a letter that you missed interest income, dividend income, and that they need to compensate for that as well.
I'll try, but I, I don't think
Yeah.
I don't think I'll get too far.
Yeah. Okay.
Dividend stockpile asked another question: do you invest in ETFs or individual companies? I think we've
Only in individuals because there are no attractive ETFs at the moment at an attractive price.
yeah, and it's complicated from an Irish perspective. I spoke about deemed disposal rules and all sorts of rules in Ireland, so I prefer individual companies.
But we're stock geeks, right? We're
Yeah,
nerds when it comes to dividend growth investing. So if you don't have the time, by all means, I would recommend everyone, and I do that also in my personal surroundings, just ditch everything into ETFs. If you
I,
don't want to spend more than 5 minutes a week at your portfolio, put it on ETFs.
I'm laughing. You say we're stock geeks, and then in the dividend day chat, Tiago is wanting to buy a reader big enough so we can read annual reports. I mean, that's incredible.
Yeah, the 10K. Yeah, okay. No, but yeah, and then Alan as well. So yeah, and in the dividend group, there are lots of geeks and even some more extreme than we are. Definitely,
But that's
definitely.
I think that's the level you have to kind of be at, that kind of passion
Yeah,
to to be successful, I believe, because it's not easy. It's hard
yeah.
reading annual reports and so on. You have to be interested in the companies, but I mean, we
Yeah,
are
and Chago wrote a nice article on his Substack again. He bought Aflac, right? This insurance company
yeah.
with ticker symbol AFL, like a year ago. Stock price went really well up, and he wrote an article, I think, this week about looking back at this investment thesis and how it's been doing. So this kind of discipline, right, military discipline that he's using, I think will give him so much wealth. And so far on Baba, he has been all the time calling me, well, not with the word an idiot, yeah, but he does it delicately. But I know he thinks it. And so far, I must give it to him. He has been right all the time on Alibaba. And this is also what's so nice about about the community. You must really surround yourself with people that don't think differently because you hear other people's opinions. It really helps you with your investment thesis. And then you can ignore it or you can do something with it. But at least it makes you a better informed investor, right?
Yeah,
And this is what I love so much about the community, both on Facebook and Twitter, because there's really a lot of diverse thinking in there.
yeah. You want strong personalities. We got quite a few strong personalities in the group that will challenge you. I mean, it's
Yeah,
easy. We could sit up here and say, oh, let's buy Beatrice, but then straight away we'll get 10 questions and probably
exactly, exactly,
and probably 10 reasons why we should not buy them. So
exactly,
that's
exactly.
good.
And the last question then from today is from Ryan R, and he's asking our thoughts on Nike, which I gave already, on HD, that is Home Depot,
Yeah.
PG, Procter and Gamble, and Pepsi right now. Any thoughts about them?
Out of all those, I would like to own Nike and Pepsi. would be the two. I really like Pepsi, and I know Dapper Dividends is bought one share a week up to
Hmm.
100. And I was going through their last 10-year history this week. I love their annual reports as well, how they lay everything out. You mentioned Coloplast, they give the
Yeah.
last 5 years. They give something similar. They don't give 5 years. I think they give a 3-year history, and it's a snapshot, and it's quite good. But they have really, really strong brand in the beverage and food, a little bit more diverse than Coca-Cola, but I just think they're a little bit too value rich for me. But um, both of those companies are two. Procter and Gamble and Home Depot, two really good popular companies, just not on my radar.
Yeah, super. So for me, I like Home Depot a lot, but we spoke about before, I
Yeah.
believe as well. The issue is there's no Home Depot in Europe. We have Carrefour and Leroy Merlin, French companies, by the way, here. I could not see myself investing in them. And Home Depot, if you just look at the performance, dividend growth, it's been awesome. So I would probably lean into Home Depot, but I would probably never buy it because I can't walk into their stores or anything. I know I own Viatris. It's not like I'm using Viagra. I'm not testing their products either. And also with pharma companies, right? Still, I get this kind of feeling with Home Depot that I would need to see it to be really convince myself buying it.
Yeah, like you spoke, you can't walk into Home Depot. Companies like Viatris, they have offices in Ireland. So if I really wanted to, I could go up and go in and probably get a tour. I can't do that with Home Depot. It's just
Yeah,
purely American. So
yeah.
I get what you're
Hey,
saying.
could you get the tour at Viagra?
Uh,
Viatris, because I would like to see the test panel.
I'm
How do
sure.
they do how do they test the product quality of Viagra?
I don't know. We might write to him and find out.
Yeah.
Okay,
I think
good.
we need to end this podcast and talk offline.
So that's the end of
The
the
only
show.
way is up.
We we'll get European DJ offline as he's getting a little bit excited. But as
Yeah.
always, thanks a million for the questions. We did say we'd do them super fast. We lied. we kind of took our time through them. Thanks a million if you stuck around this long and for all the engagement on Facebook and Twitter and emails and so on. And hopefully we will see you all next week.